All right, everybody, welcome back to another episode of the Evernest Real Estate Investor Podcast. I am one of your hosts, Spencer Sutton, and I'm joined today by my co-host, Gray Hall. Gray, welcome to the show, man.
It's good to be back in the morning slot, too. We're trying to see if we can bring some more energy in the morning. Usually these are late in the afternoon.
That's right. It's really early for you. You're in Denver, and so it's 8 in the morning to you, 9 to me here in Birmingham, Alabama. But yeah, some good energy. We look fresh. We don't look like we've had a long day. And so I'm glad
probably a little bit earlier for our guests too. So we've got,
that's right.
Yeah. Cause you're out in LA. Is that right?
No, actually I'm in Austin.
You're in Austin.
So
okay.
I was in LA though.
Okay.
So, yeah.
Gotcha.
So it's 9 here. I'm bright-eyed and bushy-tailed.
Well, great. Well, listen, we are excited to have Tamar Hermes to the show. So Tamar, welcome to our show.
Thank you so much. I'm excited to be here and talk about real estate and add some value for everyone listening.
Yeah, it's always a thrill for us, for Gray and I, to get somebody who has tremendous amount of experience, who's been very, very successful, and then really spends their days and they're passionate about helping educate other investors, because that's what we love to do. But you do this full time. Like you're an investor, but then you also coach women in real estate investing. So we're excited to get into that story. But first, I want to just hear how you started, because I think you bought your first property in 1999. So why don't you tell us a little bit about your story of how you got into this?
Yeah, absolutely. So my story is likely similar to a lot of the listeners, which is that I was told as a child, to go get a job. And I got the best one I could find, which was one in entertainment. So it was pretty fun, but I still needed to check in every morning and put in the hours. And if I didn't put in the hours, I wouldn't get paid. So I was starting to look for other solutions, and I didn't grow up with any money. So I didn't know anything about investing or real estate. Real estate was for rich people. We didn't have real estate. What was that? And we lived in a little apartment. And so I was searching for ways to make money on the money I was making and to ease my burden so I could learn how to not have to work. And at the time, mind you, 1999, we didn't have internet and Bigger Pockets and Evernest and all the wonderful things that we have now. And so I was really just talking to a lot of people. And finally, I realized that where I was living in Los Angeles, there were 5 units. And I knew that I was writing this guy a check every month. And my neighbor, who became a good friend, was also writing a check. And I thought, wait a second, this guy also worked in entertainment. And I thought, okay, there's one thing a little different here. This guy works in entertainment. He owns the building, and I'm writing him checks every month for my rent. So I thought, okay, how can I get on that side of the equation? And that's when I started looking for a duplex and bought my first property.
So talk a little bit about the mindset. So you said you didn't grow up with money. And so that was like you were living in an apartment at the time. That wasn't something that your family probably talked about at, around the dinner table. They weren't giving you books like Rich Dad, Poor Dad or anything like that. So talk about the mindset shift. You said something clicked. Like, how does that happen, especially if you didn't have a background in it? Was it just the kind of the burden of, hey, I'm tired of working and like just getting by with my salary, or what was that mindset shift?
I think it was a bit of desperation because in my mind, and I think that's when we take leaps and when we take chances and when we go for things where we're just kind of at a wall and you think, what's the alternative? So anyone listening thinking, gosh, I really feel like there's an opportunity for me in real estate, and you don't take action on it. So then in 5 years, you're still thinking, wow, I really think there's an opportunity for me in real estate. And then another 5 years go by. Are you going to be happy 10 years from now feeling like, oh, I wish I would have done it? And if you really feel like you wouldn't be happy, then, it's your life. So what are you going to do? So for me, it was pretty much, I knew that I wanted a life of freedom. I knew that I wanted to be able to make my own choices. I think that's what life is. I think that's the joy of life. I think that's when we all flourish and blossom and can grow and be all that we are, because everybody has beautiful gifts, but a lot of people are stuck paying the bills, so they can't even nurture those gifts. They don't have time to realize themselves, to share themselves in the world, because they're burdened with making sure that they can get by. And that's even, I'm not talking about people that are just making under 100K. I'm talking about clients that I have that make $500,000 a year and more, because life can be expensive, especially if you have elderly parents you're taking care of, and kids and high overhead. There's a lot of reasons why we want to create this relationship with real estate. So for me, it was really a matter of not liking my situation and feeling like, if I don't like it, nothing's going to change unless I do try something. So it seemed like reasonable because I was paying rent. So all I was doing was exchanging my rent for a mortgage, and I had a tenant. So they were paying part of my mortgage. I didn't have it fully covered. I wasn't that savvy yet. And I was just happy to just have a discount on it, and then, and it made my bill a lot lower having a tenant. And so, that was just the question. I just think, you gotta, if you're in that place where you think, I really want to, but I'm so scared of making a mistake, just ask yourself, okay, close your eyes and think, okay, it's 20 years from now, and I never bought a piece of real estate, and I'm still working at my job, even if it's a high paying profession job, or maybe it's my business, but I wish I had another income stream for times where things weren't as busy and I wasn't bringing in as much income, or I needed to hire another employee. I know someone who flips properties so that he can hire more employees. So, there's things we can do with real estate. It's a helping hand. It's an extra income stream. And so, if you ask yourself that, then it's like, what do you have to lose? Like, you may as well go for it. Otherwise you don't want to look back at your life wishing that you had done things.
I think that's really interesting you said that, because I found that most people will take action out of desperation than they will out of desire. Right. And so you have a person that has a desire. Yes, I want to replace my W-2 or my active income with passive income in 10 years. That's a desire and a dream to improve something. But a lot of times, like you're saying, 5 years passes, they hadn't done anything. Another 5 year passes and they hadn't done anything, versus, hey, I'm desperate. Like, I've got to do something. And so there's almost this sense of, for people, if you're listening to this and you've kind of put off the decision and you've listened to all the podcasts and you've read all the books, you need to start taking your mind into a place of desperation, like and giving yourself ultimatums and giving yourselves deadlines and saying, I will do this by then. And if you don't, a lot of times what we've seen is just people never even pull the trigger.
Yeah, I think that also, and what's interesting about that idea of desperation, I think even another way to look at it is just to ask yourself, like, honestly, like, in my life, what is it that I really want? And you probably have a good life. Like, you have food to eat, your kids are healthy, you've got a good life. So if nothing changes, it's still going to be a decent run. But if you really ask yourself, do I want this opportunity for financial freedom? Do I want to leave my W-2? Then, and I think that, that desperation, that stirring that we're talking about, I think that it will have you take action. And I think it's never too late. We're just the people that are successful, the people that have millions of dollars and lots of real estate. The only difference between them and you, if you haven't bought anything, is that we just took a chance and took action. It's not that we don't fail. It's not that we don't lose money. It's not that we don't get a bad deal. It's just that we got on the other side of, oh my God, this can happen, and realizing the worst that can happen generally doesn't happen. And that ultimately it's a lot better when we take chances.
Yeah. Yeah. And I think what's interesting is you bought a property and you said, I wasn't cash flowing completely, but you took action. So were you house hacking this? Were you like living in one side and you had a tenant on the other? or was this completely remote?
No, yes, I was house hacking.
You were house hacking before it was even a term. Before
house hacking was cool. I was house hacking. Yes, I lived in LA, and I wanted to replace my rent, because the thing is, you can subscribe to the Robert Kiyosaki theory that your home is not an asset, or you can actually realize that, okay, it's fine that my home's not an asset, but if I have to live somewhere besides a van, and I need to pay rent, then at a certain point, if I'm exchanging what I'd pay for rent for a mortgage, to me, and it's appreciating, and I'm getting all the benefits, and I have tenants and all the other great things that we talk about with real estate, I'm gonna call it an asset.
Yeah, and I think that's wise. I think one of the things that stops people a lot of time is the worst case scenario. And I think there's two camps of people that I typically see. And I think you kind of fall into this camp where it's like, I'm just going to take action. We'll figure it out along the way. And then there's I'm going to read every book and analyze and think through worst case scenario. I think that stops people a lot of time. I think the successful people just tend to take action, and probably that was not the best real estate investment at the time, but it has led you to where you're at. And so when you're kind of talking with clients or other newer investors, how do you think they get from this camp to this and make the jump from I'm scared, I'm afraid, there's all these things? How do you get them from that hump and just to take the first step?
I do think that you want to, when I bought the property, I did as much research as I could. It wasn't a bad deal. The numbers worked, and that's really what you're looking at. So you just make a decision, find a place, look at the numbers, and if they work pretty well, and especially in this economy, if you're buying something where your numbers are going to work, then you really, regardless of what happens whether prices go down more or interest rates go up or down, as long as your mortgage is paid and you're cash flowing, and you can at least cover it, and you're in an appreciating area, then you're going to be fine. We don't buy for appreciation in general. Although if you don't need the cash flow, and you're in a place like Austin where I am, I buy in Austin, and I do think it's going to appreciate ultimately. It may go down more, but when you have large companies moving here and other people moving here for quality of life, where there's people and there's jobs, things are going to go up, and there's a housing shortage. It's just the math. So, if you buy it, and there's a lot of places like that in the country. Austin's just one of many, many places that are growing and thriving, or areas. So it really is just a matter of, finding that place. That's part of the reason before we got on the call that we were talking about that I'm creating more of a concierge piece in 2023, where I'm going to be helping clients find agents who specialize in investment that I have vetted and help them through the process. And so a helping hand also works. I think that if you are too scared, then hire somebody to help you and just go for it. Or buy something smaller. If a lot of times, people they have big dreams, and maybe you want a big multifamily, but maybe you start with a single family, and it's a lot easier to get through that. And then once you get through that, then the next thing becomes a lot easier.
Yeah, I remember that's how I got started. I didn't really know anything about real estate. And so in 2003, some buddies and I, we bought a franchise. So we bought a Homevestor franchise because, hey, they had already done it. They had a track record of successful investors. And so they gave us the playbook, and it was like, yeah, it's worth paying. I don't know how much we paid for the franchise, 20 grand, 25 grand. We paid them a monthly fee. We spent money in advertising, but it worked. And that's what kind of helped us get over the hump, I think.
That's great. Was it Buy Ugly Houses? We Buy Ugly Houses?
Yeah, We Buy Ugly Houses. Yeah. So we have billboards all over the city. And
you still have it?
No. No, 2008 was our 5 year. So the contract was a 5-year contract, and it just so happened to end in 2008, which is when the economy exploded on us. So that was perfect timing. They were like, "Do you want to renew?" And I was like, "No, I don't want to renew. I'm scared to death." So talk about the progression, right? So you started in LA and you started with that duplex, and you probably learned a lot through that. And so talk about the progression of where you went from there. Like, did you stay in LA, buying in LA, or did you then begin to think, well, I could probably look at some of these tertiary markets, maybe there's better numbers, and just talk about how that worked for you.
Yeah, what's interesting is that I never thought that I could buy out of state, uh, because I was afraid. I mean, honestly, like, real estate investing, I mean, it's expensive. You hear a lot of naysayers, but generally I always say, if you hear someone that tells you real estate is risky, ask yourself a couple questions about the person that's saying that. One, do they even know? Do they own real estate? Do they even know? Like, or is it just, like, because my mom used to do that a lot too. My mom would be like, oh, well, Jim's cousin down the street said that real estate wasn't good. So I don't think we should buy real estate. But it's like, and Jim's cousin owned no real estate, but it's just like, these rumors start. So that's the one thing. Ask yourself that. Ask yourself if it's somebody that maybe, just got out of like losing some money. So they think, everybody loses money in real estate. They're just thinking of their one scenario, and they're forgetting the bigger reason that 90% of millionaires are made through real estate. So they forget that, and they're thinking of the one guy that lost money. And most of us have all lost money at a certain point. Although I've lost money less on I've actually never lost money on real estate. I've lost money on other deals, on private equities and crypto and all that. But that's another story. Right. We're going to stick to real estate here. And I think that you need to ask yourself also, if you ask yourself if you're talking to people that actually know, or if you're with a financial advisors. Often financial advisors don't know real estate, and they're trained to put you in the stock market. And so they'll tell you, like, don't buy real estate. It's risky. Like, I was told a lot of that. So you asked me, did I buy more? I bought more duplexes in Los Angeles because that's what I knew worked. And that's fine. That's what I realized. I mean, could I, had I done, I know other people that started at the same time as me and, started selling their properties, 1031 exchanging, buying bigger properties, going out of state, being more active. But I didn't, because I was afraid. It took me a long time to get more comfortable. But the truth is, I only got comfortable by taking action. I only got comfortable the more I did it, the more I realized, okay, I'm still alive. This property is worth $500,000 more than what I bought it for. That's good. So things like that. And so, buying out of state came later, and being more comfortable selling assets and moving them around, and moving money around, and getting used to that is something that came later for me, because
that's a relatively newer thing. I mean, back in early 2000s, Bigger Pockets wasn't around. I mean, it was just, there was less information. We're living in this information age where it's so much easier. Like, a majority of our clients don't live in the same market where their properties are. And that's like a relatively newer shift that we've seen maybe the past like 5 or 6 years, specifically to like a single family. And it was more of an active thing, and you had to be around people who knew what they do to kind of like have access to that. But now there's a ton of information. So it's just completely different. And so that was probably the best thing in that time, is like, invest in your backyard. You can go see these properties. And that's still some of the advice that people get today. I mean, I don't think that's a bad thing to I think you can learn a lot being there, but a lot of those barriers have been removed to be able to invest out of state, which I think is a great thing for newer investors.
And especially also people that live in places like Los Angeles. I had, several clients last year that lived in Los Angeles, and they said, we want to buy properties, for investment. And I was like, well, Los Angeles, I mean, you can still make good money in Los Angeles, but you need to implement certain strategies, and it's an expensive game, because you can't even get in for less than $500,000 if you're lucky. And so we ended up taking them out of state, and they ended up buying a couple places in Georgia. But that can happen, where you just live in a place, and, maybe it's where your family is and your kids are being raised, and you love it. You like the weather, but it's just not a great place for investing. And now we, like you said, we have the knowledge and the connections to be able to do that out of state. And then I always say, like, so it often makes sense to me. Like, there are people, it's funny how, like, because real estate's gotten so open now and we have so many options, I'm sure that, you know, people that own Airbnbs in different places where they like to go visit. And that's one strategy. Some people like that. I have a couple of friends where they have 5 kids each, and they like to buy Airbnbs in different places because they're saying that their vacations are less expensive by having them. I'm a kind of person that I like to go to different places once or twice. I like to see the world. So I'm always up for an adventure. I don't want to really go to the same place every day, you know, or every year. Like, so for me, I like to buy an investment for an investment. And then, you know, I'll go to Maui for a week if I want to and rent an Airbnb. So I don't own the Airbnb. So that's the other thing. Like, you don't have to own it just to have vacations in places in the world.
Right.
You can own a property or properties that pay you so that you can rent a place in Maui for a week.
So you have some people that are coming to you. You got clients that you're helping out. How are you, like, what's your advice to these people as they come and they're like, hey, Tamar, we want you to help us. We don't really know much, but we do know that we want to build wealth through real estate. So how are you helping them think through that? And what strategies are you seeing work for people right now that you're helping?
Yeah. So I like to go through my book, The Millionaire's Mentality Methodology, I call it. And it really is really pretty simple. One is that, you know, you need to get comfortable with your finances, because part of the reason why a lot of people don't buy real estate too has to do with the fact that they're really not comfortable with how much money they have or how much it really costs them to live. And if you don't know that, yeah, it's kind of scary to, like, take on a mortgage and have that additional expense if you're not sure, okay, this is how much it costs for everything that I need to live. This is how much it costs for me to have the vacations I want and every year. And once you know that, then you kind of have an idea of, okay, how much can I allocate toward real estate. Now, these days, one of the things that's working a lot, and I'm sure you've seen it too, is the seller financing. A lot of sellers are more open to seller financing right now. One is that lending has been harder to get and more expensive. And for a seller, if they have a lot of equity in a property, it makes sense sometimes to seller finance, because let's say I have 300, 400,000 in a property. And if you sell it to me, then I'm going to give you $400,000, and Uncle Sam's going to come, and you have a new business partner that wants, you know, a good piece of your pie. Yeah. And so when you do the seller financing, it enables the seller to take that money slowly in, so they don't have as big of a tax burden. So that's a big incentive to ask for that. And, you know, in approaching some people, even, like, you can find it on the MLS and Zillow, people are writing like, we will seller finance, because they want to sell, they want to get out. And the leverage that they have is that they do hold the note on the asset, so that if you default, they can take it back and they can do it again. I mean, they do have rights. So, but it's a relationship that works pretty well. So that's one of the things that has been coming up more and more. And I still think the Airbnb model is really strong. It has become a saturated market in certain areas. I think that where people have problems, and this goes with any asset that they buy, is that they don't run the numbers conservatively enough. And so when the best laid out plan doesn't work, they don't have the savings and the CapEx to really protect them. So I would say, you know, Airbnb works, but you can't do it cheap, and you can't make it look like, you know, you have to make it look like someplace you'd want to stay. And if it looks bad, then, you know, you can't expect that you're going to make a lot of money, because you can't, you know, what kind of people are going to want to stay there and what kind of guests will you have. And it's a business, an Airbnb, but you can make a lot of money at it. I mean, I keep expanding my Airbnb portfolio. I've been really happy with it. And I've made really good money. So it's been working really nicely. I like that model a lot. I think that there's going to be a lot of opportunities with multifamily coming around, because I think the lending was an issue for a lot of people that didn't have, that kind of assumed that they could do a bridge loan, which means that they have like 3 years to basically do everything and then get out. Otherwise, they have to find new funding. And right now, interest rates have really skyrocketed. So there's definitely going to be people that didn't account for that. And so I think there's opportunities there. And I'm seeing a lot in industrial and storage. I've been investing a lot in those asset classes, but mostly passively. I haven't really taken them on just because I know people that do it really well and get really good returns. So I just kind of feel like I'd rather put my money in with them and not have to learn how to manage that asset class, because you could definitely take on an industrial building. Like I was talking about my client earlier that did it. She did a smaller one, and you can learn that way and it can work really well. Although I feel like if you have a lot of cash on hand in this market and you know operators that are really seasoned and really linked into the relationships and getting the deals, that sometimes you're just better off getting like a 20% annualized return with some depreciation and not and not trying to take it on yourself, if you have a lot of other things going on.
Yeah. And that's like what is cool, you just highlighted. There are so many different ways to make money in real estate, but there's also this progression that we've seen, and it's an intimidating thing. And for people like us to kind of work in the business and we talk about it, these things seem easier. But I remember when I was first learning, it was very intimidating, and there's so much more terminology. And so I think like the progression, like number one, get your finances in place. So like, do you have a job where you can save money? Do you have your budget in a good place where you've got margin? Two, have reserves. People buy properties and they don't underwrite them conservative. Like that's how people get in a really stressful place. And you don't want real estate investing to be stressful. And so do you have the reserves where if it takes 90 days to lease the property for whatever reason, that you're okay? If you have a AC go out, you're not having to put it on a credit card. So like get those in place. I had 3
go out in like a matter of 2 months now. Even on a single family home, an AC can cost $6,000.
Yeah,
so
that's right.
You got to make sure that you have that money. Yeah, absolutely. And ACs, it's like, in Texas, you don't have AC, you ain't getting nobody staying there.
Nope. Yep.
For sure.
Same in Alabama, and like hitting on good operators too. I mean, we had a client that bought a house, and they were sending us this quote that they got from a third party HVAC company that they had gone out and found $25,000 for a heat pump, and we were like, no, that's like at most like $5,000 or $7,000, and so I think it hits on the third point is like, getting into something that there's a lot of information, that's low barrier to entry, which is single family houses for the most people. And that's just a good place to start. And like, you're not going to replace your income off one single family house, but like understand the financing process, understand how to find a good team, understand what it looks like to, manage a property manager or manage a property. And like, that's like a very like easy place for people to get. It's like, get your finances in order, get your reserves, start to find good operators in place. And so talk a little bit about like, what is the type of team remotely investing, because it's different, because you can't go over to the property and your plumber can't go over there necessarily. Let's work on your house. So how do you think about finding the right team or coaching people to find the right team when they're investing in single family houses in Georgia, like you mentioned?
Right. Well, part of what I'm doing is to avoid them having to find the right team is to put them in place with partners where we can implement the team so that they don't have to do all of that legwork and, deal with the stress of, handymen not coming up or women not showing up, things like that, because it does happen and it's important to find the right people. I would say also, though, that finding a team, just like anything, it is more intimidating when you haven't done it. So it feels daunting, like, oh my God, I'm going to have to find this person and this person and that person. And, you just walk through it. You just look for reviews, you call people, and, sometimes you get somebody that's not great. Like with one of the big issues with Airbnb, cleaning people. like your cleaning team.
Yeah.
You never want, it's happened to everybody that owns Airbnbs where, a guest arrives and they're like, the place isn't clean. And you're like, oh my God. But, finding teams that'll work and being able to manage through all the pieces. And you can absolutely, I would say, hire somebody like you guys, pay. That's the other thing, pay some money. Like sometimes, you just got to pay somebody that knows what they're doing. Don't be like, if you get it for I know that there was one property I had and the property manager just wasn't good. And they really weren't doing the job. I had to evict the tenant. I got rid of the property manager and I was paying like 6.5%. And I was like, oh, that was such a good deal. Well, I pay 10 now. And you know what? It's a better deal because I actually have a tenant in there that pays the rent. Wow, look at that. So I paid a little more, but they vetted the people a little closer. They were paying more attention. They were a little more on it. Sometimes when companies get too big, they run into a situation where staffing becomes an issue. And then you may run into, or maybe they create a funnel where somebody's giving them a ton of leads and they can't keep up with the demand. And so the customer service is lacking. So you want to pay attention to all those things. How quickly do people call you back? How efficient are they? And you want to just at first, if you go out of state, you may need to, I have a couple properties that I've never been to. But actually, yeah, I probably have a decent amount that I've never been to, but as long as you have people that you trust there, then that makes a big difference, because if you have people that you trust, then generally they will manage it, maybe not exactly the way you do it, but as well, they will get the job done.
And real estate is just such a relationship game. And too, talking about the progression, if you know somebody in that market, there's a good chance they might send you a deal if they know what you're looking for. They might know another strategy, or they might know somebody that you can connect to. And so that's why this, mantra of just take the first step and buy something that's lower risk, lower return, but it gets you in the game. And then you've got one property and you can use that knowledge, but also the relationships too. I mean, that's how all of real estate is created. It's all the good deals are done, but you can also be connected to other people that might know a different strategy that can help you out in the scenario. And so I think that's just continues to hammer on the point, get in the game, because that opens doors up in the future. And those doors aren't going to open up if you just never take that first step.
Yeah. And the other thing to understand too is when we talk about lower returns, sometimes, when you buy a property, you have a lot of expenses the first year. And if you're doing it efficiently, if you're playing the real estate game efficiently, then you will be able to have a substantial amount of deductions. And so, but maybe the first year you're not making as much money, but then as time goes, you start to make a lot more. Just that's the whole model of a value add, right? Where you buy it at a depressed price, you're not making as much money. Sometimes you're not even paying your investors for 6 months or a year until you stabilize the property, but then the rents go up. So you also have to be confident and trust yourself and the numbers to be able to see that, yeah, we're not going to make money from day one, but we know in 12 months, we're really going to be looking great. We know that ultimately our 5-year projection looks really good. So that's another piece of it, is just being able to start trusting yourself a bit in terms of what you think that the numbers will look like. And based on, what you're looking, based on, comps, and based on maybe a mentor that's overlooking your deal and helping you with the underwriting, or a property management company that can help tell you what rates are, things like that.
This has been great. Tamar, thank you so much for being here on this podcast. I would love if you would share, if you don't mind sharing, how people can get in touch with you. We do have a lot of listeners, and if somebody wants to reach out to you, what's the best way to learn more about what you do, your concierge service? I know you have the book, The Millionaire's Mentality, which you can buy anywhere, but where else can they find out more about you?
Yeah. So for the book, you can go to tamarbook.com. It's also on Audible. If you go to tamarbook.com, there's some free gifts on there that are really great. And you can select anything you want. I like the toolkit myself because it has a lot of different tools. I can't come up with the word. There are different tools, strategies, right, things that you can use in real estate. So
there's so much value. It was tough to.
There's so much value. I just couldn't. I was speechless. Yeah. I was left speechless. So that, and then the website is Wealth Building Concierge. Concierge. Somebody said, concierge is too hard to spell. And I was like, you know what? If someone can't figure out how to spell concierge, they shouldn't be calling me. They've got bigger problems.
Correct. That's true. That's right. I'm sure people can figure that out.
You can email at hello@wealthbuildingconcierge.com. You can also go on LinkedIn, and look me up at Wealth Building Concierge or Tamar Hermes. There's lots of ways to find me. I try to make myself very accessible, or at least to be able to connect with the company.
Well, I think that's great that you do that, because just in our, 40-minute discussion here, I can tell that you have a lot of value to add to people who are looking to take that next step. So thanks for sharing all that information. And thanks for being here.
Thank you. Thanks for having me.
All right, everybody. If you haven't already, go check out Tamar and make sure you leave us a review anywhere that you listen to podcasts. And we'll be back next week with another episode of the Evernest Real Estate Investor.